Subclass 1.3, Miscellaneous Policy, Part 2, we continue. So now we look at engineering insurance. Also commercial lines, you also don't need to know this for your personal lines exam, but as we said before, it's good to know it for background. Description of cover. It would be possible to write volumes on the subject of engineering insurance, so we can only hope to introduce this policy type here. Engineering insurance provides cover for large construction and engineering projects and includes categories such as contractors all risk, also referred to as CAR, also called contract works or construction insurance. And please, that word CAR, uh, it's not a car insurance, the car you drive. That insurance is called vehicle insurance or motor vehicle insurance. That's not commercial lines, that's personal lines. Car insurance, you must link it to commercial insurance. So car is falls under commercial insurance, and the word car comes from that word C in contractors, the word not the word, the letter C, the letter A in all, and the letter R in risks. And then it is for CIR, car insurance. So car insurance stands for contractors all risk, also known as contract works or construction insurance. This is all about when they are busy constructing a building. We can also look at advanced loss of profits, engineering project insurance, and machinery breakdown. So when you look at car insurance policies offers cover on all risk bases for physical loss or damage due to the insured property during the construction phase. This is very important. So car is about the construction phase. So you must link them. Car is while the builders or the developer is busy in the construction phase. Okay. Policies can be issued over all types of building and civil engineering construction, including residential housing, commercial property, and infrastructure. The main perils covered on the car policy are things like fire or explosion or theft or burglary or collapse, earthquakes, landslides or mud storms, mud floods, storms and floods. So this developer or this contractor is busy building this building, and suddenly the earth collapsed. Like in Centurion, there's a lot of areas where the ground just collapsed and then the buildings fall inside the ground. Um, Earthquakes can damage it, maybe, when the earth moves, it cuts the property in half. Or there might be a landslide like we used to see at the KZN storms last year or the previous year, or floods, flooding over the place, or even theft. At night, they leave all the things, on building sites, and then other people can come and steal some of the building material, building equipment. They might be busy installing the gas lines for the gas stoves, and then somehow there's explosion and the gas pops and the cylinder pops and there's a big fire. You see, so now the building contractor is set behind because he's got damage. Now what now? So the policy can also include a third-party liability section to protect insured against third-party claims related to construction activities, and instances for this third-party liability. It might be that the contractor is finished with the building. He wants the documents for occupation to be signed off, so they send out uh, the inspector to come and inspect the building. And now suddenly a piece of the cement falls on the inspector's toes, and now he broke all his toes, and he needs to get the operation, and he suffered damages. So then that third party insurance will pay out for the inspector's operation to fix his broken toes. When we look at the advanced loss of profits, all right, advanced loss of profits. This policy covers the principal's loss of gross profit resulting from a delay in completion of the construction and or erection. So normally, when a person contracts to build a house or a building, um, the owner will tell him, listen, we give you 12 months, then that house must be fixed because we need to move into our new double-story house. So, but because of all that other elements, floods, storms, theft, whatever, the contractor see, oh, he's not going to be finished in 1 year. He's 6 months behind because of all these other things. So he will inform the owner of the house, no, you cannot able to move in next year, January, you can only move in June. So he will get penalties, and it depends, they all decide on penalties, 1,000 rand a day or 10,000 rand a month or whatever, because now the owner cannot move into his house, so he must rent, uh, and he wants to recover that rent. And no, not only that, the contractor gets penalties. He worked out in his quotation. He only needs to pay his builders, his staff, helping him to build the house for 12 months. But now he must pay them an additional um, salaries for another 6 months, which he didn't bargain on. So he's got losses, and he needs to be uh, refunded. So he gets the insurance will pay him advance on that loss so that he can carry on finishing the building. He got that advance money to pay the extra 6 months salaries for his people. So that's why they call it an advance for your loss of profits. So the second bullet shows it cannot be issued as a standalone cover and is usually issued alongside the car policy. So this advanced loss of profits must go with the car policy. Indemnity is limited to the actual loss of gross profit sustained for the duration of the delay in the completion of the project, which delay must be caused by an event covered under car. Okay, so it's limited to the actual loss or the gross profit. It cannot be more. So if you're going to lose, let's say, 200,000 rand, you cannot ask for 500,000 rand loss. No, it will be limited to the 200,000. But normal working delays are not covered. For starting to build at 10 o'clock in the day and finish at 2 o'clock and then you go home lying on the couch, that's 4 hours instead of starting at 8 and finishing at 5, which is 8 hours with a lunch break. That delays will not be covered. And then we look at engineering project insurance. So this is an insurance policy that combines a number of typical engineering product covers into one. So it's a combination. Okay, it's a combination of your car insurance, your contractor's third party liability, and also the advanced loss of profits cover. So the three insurance which we just discussed before, this engineering product insurance covers all three of them, combine them in one policy, namely the engineering project insurance. So if you take this insurance, you've got everything we mentioned just before. Then you look at machinery breakdown insurance. This policy indemnifies against sudden and unforeseen physical loss or damage to machinery which has been erected at the construction site and is operational or at rest. You know, when they build this big block of flats, they've got these cranes, the big long cranes, when the driver has to climb all the steps and ladders up to the top. And then he's swinging the crane and he's moving stuff up to the top. So if they talk about this, it can be thought of as accident insurance for machines and provides for internal breakdown, not wear and tear. So they will not pay out for wear and tear. Those things need to be maintained. But if it's an actual breakdown, these cranes also work with machines. So maybe the engine will break down or something happens. And now the crane cannot do its work and now the whole building project stands still. So this policy performs by paying all repair costs up to the value of the machinery at the time of the loss. In other words, the maximum indemnity is the current value of the machine. They will not pay more than the current value of that machine. And when we look at marine insurance, commercial lines, marine insurance is split into two components, namely risk at sea. referred to as ocean marine, and the risk on land or inland marine. So we look at ocean marine insurance or inland marine. And the word says it all. Ocean marine is on the sea outside, inland marine is in inland. So ocean marine is a term discussed under three main categories, namely, we're going to look at the hull, the cargo, and protection and indemnity or liability cover. Commercial hull insurance indemnifies vessel owners against loss or damage of their ships, whether at sea or inland waterways, and places a value on the cargo that the particular vessel is carrying. So they must work out what is the amount of the cargo, and that is the value that they can assure the cargo as well as the ship's value as well. It covers accidental loss or damage to the insured craft, whether a fishing trawler or an ocean-going supertanker. Smaller craft will most likely be insured on a personal lines or commercial lines policy rather than on a big ticket marine insurance policy. So if you've got a boat or your friend has got a boat or a jet ski, which you use weekends on the dams to go and ski or fishing, those boats will not be seen as commercial lines, but rather personal lines, unless you use that boat for work to go and fish or do whatever you need to do. Marine cargo insurance, meanwhile, compensates owners of cargo for losses due to accidental loss or damage in transit due to fire, theft, or shipwreck. So if you maybe you want to immigrate and you put all your house goods on containers in the ship, and you wait for it to arrive at the other side, and then you find out the ship it shipwrecked, it sank, or it beached on another island. The things fell off the ship because of bad storms. So everything you own, all your household goods are gone. So then they must pay you out. They have to have insurance to pay you out that you can take that money and go and buy new things. So the cargo is covered for the full duration of the journey and typically includes transit from the seller, a factory or a warehouse in China, for instance, to the buyer, a retail distribution center located in Johannesburg. It can also be from the one um, company making products in China, and they send it to the buyer in Johannesburg who wants to import those things to sell in South Africa. Cargo insurance is an important enabler for cross-border trade, as banks will not discount a bill of exchange unless marine insurance is in place. So the banks will want to see that marine insurance is in place. The purchaser of the goods must lodge a certificate of insurance with the bank as collateral for the deal. And you should note that cargo insurance is not limited to the marine world and can be issued for a cargo being exported or imported via air, rail, and even by post. So, marine advanced loss of profits cover can be included as an add on the marine policy to provide cover for loss of profits and the increased cost of working that results from a loss of production or turnover, or a delayed start-up following loss of or damage to imported critical equipment covered by a marine cargo policy. So yes, you can also get an advance for the loss of profits because of they losing your container, or they misplacing it and they don't know where it is. They need to find it for you. In the meantime, you have to sit without, I don't know, new clothes or whatever was in that suitcase. Then we look at travel insurance that provides cover for a range of losses that an insured might incur while traveling. So you don't want to get to another country and get damaged and end up in hospital and having to get an operation, and then you must pay in rands. But now you're in England and they want pounds. This happened to me. I lost my. I don't know if you can see. I lost my. How can I move it like this? You see, my one finger is a bit shorter than the other one. I lost my fingertip my first day I landed in England. Um, then it was an accident. I ended up in hospital in Hammersmith. And my first day in England, I spent in hospital, and the next day they had to amputate the rest, and they had to clean it. And yeah, so my specialist, and I had a huge bill which I had to pay in pounds, British pounds. But luckily, I had travel insurance, and they paid for everything, so I didn't have to pay a cent. So the bulk of this business is written for those traveling abroad, but policies are also available for travel within the borders of South Africa. So normally, when you buy an airplane ticket to go abroad and you pay with your credit card, you get 3 months travel insurance up to a certain amount, which is fairly good enough. The main insurers active in the travel insurance space offer a range of products for both individuals and firms and can thus be categorized under either the personal lines or the business insurance categories. So the travel insurance sum insured. The sum insured vary widely across an insurance policy and are typically included in the policy wording per insured event. Most travel insurers offer a range of cover based on the potential insured's needs, similar to the comprehensive versus third party offerings in the motor vehicle space. Allard, for example, describes its travel insurance under the headings of comprehensive, premier, medical, business top up, or visa and senior. But other companies might describe their travel insurance differently. It can differ from company to company. Determining the travel insurance premium. The premium charged on a travel insurance policy is based on the benefits chosen by the insured. The sum insured for each benefit and something different from other short term insurance policies, the duration of the cover. A travel policy is not renewed on a monthly or annual basis like most of the other cover described in this book, but is rather calculated for a fixed duration of less than 3 months. So a single premium is charged and the premium must be higher than the longer the cover period selected. So yes, you can stop pay for it on your own. Then when we look at cattle and livestock insurance, commercial lines, once again, farm animals, cattle and other livestock face mortality risk caused by accidents, sickness and disease. Also theft. There are coverages that apply to most animals, livestock and poultry, and specialty coverage for specific groups of farm animals such as cattle or sheep, goats, pigs, hogs, chickens, and emus, or a combination of these on your farm. Emus is it's like an ostrich. Looks like ostrich, just a little bit smaller, and they come from Australia. But there's a lot of farmers in South Africa who imported them that also farms with emus. The animal and livestock insurance products are normally designed around the specific needs of the farmers' herds and stud animals. So I know most of the cattle farmers or livestock farmers, they insure the animals against theft or accidental death, drowning, sickness, etc. Then we look at agricultural insurance, that's commercial lines as well. Agriculture is an important contributor to South Africa's GDP. Commercial farming business are so distinct from other commercial concerns that the subcategory of which insurance has been involved, namely agricultural insurance or agri-insurance. This category of insurance combines a number of standard business categories with agricultural specific solutions. The insurers of crop risk distinguish between so-called direct perils and systematic perils before indicating the types of crops that can be covered for each set of risks. Okay, so it depends what you farm, what will the category be, and yeah, the crops, etc. So we turn to leading short-term insurers, Santam and Zurich, for an overview of some additional insurance components that can be incorporated into a comprehensive agricultural insurance policy. So we look at property and vehicle insurance, engineering insurance, liability insurance, and crop insurance. Okay. Householders or household contents insurance. Householders or household contents insurance is fairly self-explanatory in that it provides for loss due to theft, break-in, or accidental damage to household contents. The cover is restricted to goods contained within the home. Unless otherwise specified, it is categorized under the property insurance class. So the householder's policy sum insured, one of the most common mistakes that insured make is to underinsure their household contents under this section of the insurance policy. Underinsurance only becomes an issue at claim stage when average will apply, leaving the insured out of pocket. It is therefore important to make an accurate assessment of the household contents alongside estimates of the replacement value of such contents. Claims history and no claims bonus. As in the case with personal lines motor and personal lines homeowners policies, many insurers offer no claim bonuses with their householders insurance policies. These bonuses are usually paid back to policyholders as a cash sum following a predetermined number of claims-free years. Some insurers will only implement their no-claim bonus plan if the insured holds a portfolio of covers including motor, householders, and homeowners insurance. And that is why we see that some insurance companies go things like no-claim bonus, claims-free years. So the longer you've got no-claim bonuses, the better your record is. The longer you've got no claims 3 years, the better your policies is, because they will say you're not a customer claiming too often, you've got a good record, so they will benefit you by giving you discounts or better rates, etc. And this is the end of part 2. If you've got any questions, please feel free to send me an email at jaco@ilearn.co.za, and I will gladly come back and answer all your questions. Good day.